Welcome back to FLB YouTube channel, this time with the tax model regarding the financial model calculation, distribution models. So not calculation, but the distribution of the amount which was legislated by the National Plenary. Good. As we were talking last time about the simple model where we had three different variables, we also used three different variables here. But as I told you last video, this is just a template. If you have more variables or other variables, you can just add them in this template. So if you want to download this workbook here, just click on the link below the video. Good. This model is based on the tax distribution also used by a lot of countries. So it's a radical function. So the higher your income is, the more you need to pay, but the slope decreases, and therefore you have radicals. So just to give you a brief overview here, you have your reserves, IGP and OGX income of all LCs. And the last model, we were just distributing it according to how much percentage the LCs earned through IGP and OGP and OGX and had as reserves. This time it's completely based on tax. So for example here, the more the LCs are earning in IGP, the higher the tax rate. So here this LC, for example, earns less than LC1, therefore the tax rate is lower. And then this table here calculates the absolute amount they need to pay. So for example, this LC, LC1 and LC2, LC1 earned 150,000, LC2 earned 100,000, and this is what they need to pay, so approximately half. Good. How is the tax rate calculated? So we have three different kinds of tax rates. If we drag this away, we have, for example, total IGIP earnings per LC. So if the LC is earning 1,000 units of your currency, whatever your currency is, they need to have a tax rate of 1%. 2,000, 1.74%. So these are percentages calculated as a function, so a radical function. So if we take this formula here, so first of all, depending on your currency, I standardized the currency by 1,000, so I divided by 1,000. If your currency is less, just leave it out. And then caret the radical. So if you have a number between 0 and 1 standing as caret, then you get a radical function. So this kind of function with a decreasing slope. Now you need to figure out the fairest radical. How to figure out the fairest radical? So what we can see here, IGP here, IGP is the highest tax, has the highest tax rate, because the LCs earned most with IGP. Number 2 is OGX. So the radical for OGX is 0.7. For IGP it's higher, and for the reserves it's less. Normally, you cannot tax negative reserves. So here you have an VLOOKUP function with an if NA logical function included. Therefore, you cannot tax LCs in debt, at least for reserves. I mean, you can tax them for IGP income and OGX income, but if they are in debt, you cannot tax their reserves. Good. But now how to figure out the fairest radicals. So my suggestion for you would be to set max values per radical according to how much the LCs earned. So you can set into your companion that, okay, if IJP is the highest, then this radical should be also the highest, approximately 1.8 for example. But now, how to calculate these values that they are as fair as possible. And as you can see here, I calculated this number with the solver function in Excel with these constraints. How to do that? You go to data, go to solver. Okay, here in the solver you can already see what I've done here. So set objective. So this here is, let's switch that back first. So I mean, when you are making the taxes, you will never reach a zero according to what you actually need to distribute. Therefore you have maybe out of 300,000, 380,000, 30,000 left, which need to be divided equally, for example. An equal distribution is not the fairest because it's not taking in consideration how much money the LCs actually have to pay. Therefore you should reduce the equal distribution, and this is what you're trying to do with the solver function in Excel. So you have this here. This is the function what you need to distribute equally. Here I already created, I also already calculated it. So just let's take, for example, 0.5 as a radical here. Then you can see, okay, we have a negative equal distribution, which doesn't make sense, of course. Now let's go to 7. Let's can see it a bit more. 7, 5, and now we have an equal distribution, which is not fair. 11,000. It's not much, but nevertheless we can reduce it when we use the solver function. So we have this number here. This should be 0 or minimize it as far as possible by changing variables. So the changing variables are these 3 numbers. So I have this, right? Zack, zack, zack. So you can make that by using the control button, and afterwards you have constraints. So here I already have the constraints I want to have. So the constraint is here, C5 must be smaller or the same as the maximum. So you go to add this smaller or equal to the constraint, which is your maximum, and then you click on add. But yeah, I've already done that. And then in the end, what you also need to use is to select the solving method. This is the non-linear, but if you write in your companion what kind of solving method you are using, otherwise you will have different possibilities. And click on solve. Bam! Solver found a solution. All constraints are optimality conditions and are satisfied. Okay, now you have 0. That's perfect. You have 0 equal distribution, and this is here your total payments per LC, and you can see that LC1 pays by far more because of their IJP earnings, which has a higher impact on the payment than OJX and the reserves. Yes. If you want to download this workbook, just click on the link below the video. If you have questions, you just write a comment in the comment bar. Okay, see you next video with another distribution model. See you soon.